Hey everyone, I just got back from vacation and I have a really exciting video for all of you today about dividend stock investing. Sometimes when I go on vacation, it's really good to get away because it gets me thinking about the big picture and looking at life, looking at investing through a new perspective. And today I want to share a number of different topics because there is a lot going out in the stock market right now. A lot of it which I think is quite risky. And so I want to start the video today with a public service announcement because I think there is a huge amount of risk out there right now for new investors and seasoned investors alike. I want to talk today about some of my largest financial losses because even though I'm here on YouTube, I've been investing for over 20 years in dividend stocks. I've done really well. Of course, I have made my fair share of losses and mistakes over the years. And so I want to keep it real and I want to share my losses with all of you because these days, all too often, it seems like folks out there are just bragging about their winners. So rather than share my winners, I'm going to go into the losses. I also want to share with all of you today some tips, insights, hacks, and strategies that I use to cope with the madness out there in the stock market right now. I'm talking about meme stocks. I'm talking about these false idols, these figureheads, these large tech innovators and leaders who are potentially, in some cases, leading the common person, the common investor down the wrong path. I want to share with all of you how I deal with all of this. And then I'm going to close out the video today with the stocks that I'm buying this week right now. In fact, I bought a stock today. I added to my position in Church and Dwight. This is the company that makes OxyClean, among a number of other products. So I was really excited to add to my Church and Dwight position today. And so this is going to be a really special dividend stock video. Before we even get started today, please do not forget to smash that like button to show your support. And also don't forget to subscribe. It's really important to subscribe because I have so much amazing content on the way. This is a really big year for my YouTube channel. This is dividend stock investing for everyone. Let's get started with another dividend investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone, let's get started. I want to start with the public service announcement today, and then I'm going to roll right into some of my large financial losses and what I've learned from those losses. So check it out on the screen right now. The reason I'm doing this announcement is because I'm hearing a lot of reports out there from dividend investors that they are losing money. And a lot of the reasons that they're losing money is they're turning into speculators. They're going after speculation. Some of these are newer investors and they're getting caught up in these meme stocks, if you will. These are the stocks like GameStop, if you will, that have turned into memes. Even asset classes, cryptocurrency asset classes have turned into memes recently. If you're on Twitter, you see all of these people with the pictures with their laser eyes. And the reason they have the laser eyes is apparently this meme portrays that they're laser focused on a certain price target for Bitcoin, which I believe they're targeting $100,000. And so there's this whole meme that is catching people up and influencing them and turning it, quite frankly, into a game, into gambling, if you will, in many cases, because when you look at these memes, another example would be the diamond hands. I even saw someone at the mall the other day. We went to the mall to grab lunch, and there was a fellow there in a sweatshirt that literally had the Wall Street bets with the diamond hands on his sweatshirt. And what I'm saying is you look at that and you compare it to gambling, a casino, if you will. A lot of these things are turning the stock market in many ways, visually at least, for newer investors into a game, if you will. And stock market investing is not a game. It is long-term investing. It is about personal finances. It is about investing in quality businesses, in my opinion. And so these memes are taking people down a lot of wrong paths. And so anyways, I'm getting reports. Sometimes I'm seeing them online. Other times, people are reaching out to me. They're contacting me on the social media platforms that I'm on, and I'm hearing about these unfortunate losses. And so I want to do just a quick public service announcement. Check it out on the screen right now. And what I want to basically share is that these memes, they're turning this into something else. As I just mentioned, the memes, they can be fun. They're a good joke, if you will. But I also think they're irresponsible. I think that the memes are irresponsible, especially when they're being spread by large figureheads who have a lot of clout and a lot of followers. I think that these memes, they can mislead newer investors and older investors as well. And so if you're out there, there are kind of two takeaways here is be careful of the memes. Don't get drawn into it. Don't think, hey, this is just a fun game. Oh, everyone's making all these profits overnight. No, the memes are irresponsible. And if you are in a position of power, you may want to consider not using these memes because they can mislead a lot of investors into potentially losing money. Let's keep going. And so the other thing I want to share with these public service announcement right now is not everyone wins with these risky investments. And so you don't want to fall for it. And so I'm going to tell you something. I am seeing so many investors now on Twitter, on social media, and they're retweeting themselves from the past. They're saying, hey, I told you so. Hey, this tweet from the past, this one did well. Check it out. And I'm not going to lie. I've done this myself once or twice over the years, maybe more than that. And I think it's nice for us all to pat ourselves on the back. And investing is exciting, and it's something that is exciting to see these gains. And it's great for members of the community to be proud of themselves. But what I'm sharing is from a human psychology standpoint, most people out there, they're going to really build up their wins, but they're going to minimize their losses. And so that's exactly in the video today why I don't want to talk about my wins. I'm just going to talk about my losses because we're not talking about the losses enough. Everyone out there in social media, they're talking about the wins. And there's a similar story. And basically, this is a kind of an age-old wisdom that comes from my wife's mother. And she basically said, like, hey, she doesn't gamble. Really, I don't think anyone in our family really is into gambling. Maybe once in a while, if we're in Las Vegas, we'll have, a little bit of fun with a very small amount of money. But these days, I don't even do that. I just can't part with my hard-earned money. But what she said, and probably one of the reasons no one in our family does gamble, is this age-old wisdom that people who go out and gamble, you would think they all win. They all win a fortune because they come back. And I've heard this at work before too. I've heard so many people at work saying, hey, I went to Las Vegas this past weekend and I made a ton of money. And I always hear this, but you never, ever, ever hear when they lose money. And so the public service announcement is, it's the same thing with stock market investing. Be very, very careful what you hear out there because for every buyer, there is also a seller. And so there are people losing money out there. You just don't hear about it. And so the problem these days is this hype machine on these meme stocks, if you will, these speculative investments. It is in overdrive. And this PR machine would make you and me think that everyone out there is making hundreds of % overnight, but it is just not the case. And it is a very, very risky situation that is out there right now, in my humble opinion. Now, let me keep going. Check it out on the screen right now. And so I also want to just share that the largest braggers, this is kind of age-old wisdom that came through my family. This is something when I was kind of growing up that became evident to me, and my parents would sometimes talk about this, that the loudest braggers, they're not always the people who have made the most money. They're not always the people who have had the most success. Sometimes those people with the flashiest lifestyle, the most amount of bragging going on, they're oftentimes trying to compensate for something psychologically. And maybe they don't mean any bad, but they're just trying to kind of compensate or make themselves feel good. But what I learned over the years, and I learned this through business as well, is some of the most kind of humble people, or people you would never think have a lot of money, they have the most money, and they have so much money, and you'd never think it. It's these people that drive the old car or don't have much clothes. They just wear the same clothes over and over because they're smart, they're humble. They don't need to brag. They're not, hey, they want the opposite of bragging. They want a low profile because they've done so well. And so just something to keep in mind is that all the hype machine out there, the people bragging, the people sharing, hey, I wish them all the best. I wish everyone all the best. But I'm just saying, be careful for the source. Consider the source and realize that the source, sometimes the reason they're bragging, it may not be for your best interest, for my best interest as well. So let's keep going. Check it out on the screen right now. And so I just want to take a different approach. I want to take a completely different approach from everything that's going on out there right now. I want to share how I've personally had losses over the years in the multiple tens of thousands of dollars. It happens to all investors. I think anyone who's been in the investing game long enough, and my losses that I'm going to share, they're not all, quite frankly, investing related per se. You'll see in a minute what I'm talking about, but I want to take a different approach. And so I'm not going to share any of my winners today. I'm not going to brag about anything today. I'm not going to go on Twitter and retweet my old tweets where I've made money on XYZ stock, because I want to keep it real, because so many people out there right now, they're feeling frustrated. So many people out there right now, they're feeling isolated. They're feeling like, hey, I'm the only one that's losing money. What am I doing wrong? You're not. It's just that the portrayal out there of what's happening in finance right now is completely skewed, and it's an illusion. It's quite frankly a lie. And so I will progress more through this story as I go through the video today, but I just want everyone out there in the community to know that you're not alone. I also want everyone in the community to know that, hey, yeah, I've had losses in the multiple tens of thousands of dollars before, and I have recovered, I have thrived, I have done extraordinarily well in my dividend stock portfolio despite these losses. And quite frankly, I look at the losses as lessons that have informed my strategy. They've made me a better investor. And so everything has two sides. The losses have fueled also a lot of gains for me and have informed me as a solid, well-founded investor. And one of the reasons I'm basically exclusively focused on dividend stocks these days is I'm kind of at a point in my life where I've had enough of these losses. I don't need any more. And so I'm just staying focused on what works for me. Although I do have a very small portion of my portfolio carved out for speculation, as many of you know. And I've talked about that from time to time, mainly on my Patreon. By the way, I have, I believe, about 120 patrons now. If you want to unlock 20 bonus videos immediately, head on over to my Patreon. I'll link to that in the pinned comment below and check that out. Join us over there. The support means the world to me. It helps me build my channel here on YouTube too by reinvesting into my equipment, into what I'm doing here on YouTube. And so with all of that, I want to move from this public service announcement that, hey, don't believe all the hype out there. Think for yourself. Be careful. It's a very risky time in the stock market, and I think social media has created a lot of risk, unfortunately. That's the announcement. I want to move into where I've lost money and share some of these losses with you. And then after the losses, I'm going to share also how I deal just with all the hype that's out there right now. So let's keep going. A lot to cover today. Loss number one. Check it out on the screen right now. And so the first one I want to share with you is angel investing. Okay, and so I want to say that I've made a variety of angel investments over the years. The time when I did the most angel investments was in 2017, and I made 3 angel investments. And so I'm actually going to go through all 3 of those angel investments in the video today. But before I even do that, I'm going to tell you, why did I get into angel investing in 2017? Part of it is honestly just a bunch of good opportunities came up at once. It was mostly friends of mine who had started companies who I trusted in, who I believe would be very successful with what they were doing. And so I took that opportunity. But part of it also, quite frankly, in 2017, I'm not going to lie. I wanted to feel a little bit maybe like a big shot. I live in Silicon Valley here, and there are a lot of people around here who are really successful in tech. I've done well in tech over the years, but not through angel investing, mainly through working at companies that have done well and participating in employee stock options and RSUs, restricted stock units. That's a whole nother topic that I'll get to in the video today. But anyways, and I see people on my social network, and this really ties into the public service announcement today at the beginning of the video, is I saw people in my social circle saying, hey, I'm an angel investor. I invested in this and that. I did all of this. And I got caught up in the hype a little bit. Now, thankfully, by 2017, I was already well into my dividend investing career. And so I was smart enough to carve out a smaller percentage of my portfolio for the angel investments. I'm really thankful I did that, because if I went too aggressively and I didn't learn from my mistakes in the past, that would have been pretty bad. But thankfully, I did limit my losses, and I think speculation can have a place in a overall financial strategy. But nonetheless, I went for this speculation, and I think a lot of it was honestly fueled by the fact that, yeah, I wanted to feel like a big shot, if you will, in the Silicon Valley. And that is not a good reason to make any kind of investment. Anyways, I want to go on. I want to share some of these angel investments, and I'm not going to name the companies because I'm going to be talking about things that happened at these companies that I don't want to get into too much depth on which company it was, but nonetheless, I want to go into them. So check it out on the screen right now. And I guess before I even get into those specific investments, I just have some overall lessons. As you can see here, I don't deviate from my dividend strategy. I want to stay true to myself. Speculation is okay, but honestly, yeah, I did carve out a percentage of the portfolio for angel investing, thankfully, but it was probably too big of a percentage, so I went a little too big. I want to remain humble because I'm still making mistakes, and this is one of the reasons I don't like some of these false idols out there right now in social media that people are promoting or that are even promoting themselves, because we are all human. We all make mistakes. The minute you're not humble is not good for stock market investing. I am not going to be doing any more angel investing for the remainder of my financial career. At least as of this time, I don't plan on doing it. And I'm being, as I said, even more conservative these days because I'm too late into my investing career really to afford more mistakes. And so anyways, of the angel investments I made, I want to share with you what I learned from these. So the first one, it completely went bust. I invested in a friend of mine. I made an investment, and honestly, the investment was doing really well. This was a tech company, and this was not just, oh, I have an idea, Ian, give me some money. No, it was, Ian, I have an operating business that's doing millions upon millions of revenue per year, and we're churning out a profit. I got to look into all the financial statements. I spent a lot of time analyzing, and all the numbers, the revenue, the profits, the operating profit, up and to the right, things are going well. Business is expanding, great brand, going all in the right direction. And so, yeah, I made a follow-on investment as well. Not only did I put a bunch of money into it, but I put a follow-on investment. I put a bunch more money into it. And then all of a sudden, pretty much overnight, the company went bust. And the reason it went bust is one of the team members, who actually happened to be related to the founder of the company, basically made a large lapse of judgment, made a very bad error, and something basically happened because of his lack of proper supervision, where the company lost its clients basically overnight. And so everything just went away. And it's the kind of thing where the clients lost confidence in the company, and it's not like the company was going to be able to get the clients back. And so basically, company went bust, and that was that. And so I had some lessons from this one. Check it out on the screen right now. Now, thankfully, there was some salvageable value in the company, and that salvageable value was actually pennies on the dollar, but it did get rolled into another venture, and so I still do own some equity that has some salvageable value. But at this time, on my first investment, the best I can hope is perhaps to get half of the money back that I invested. Maybe in a miracle situation, I could get all of it back. But what did I learn? I learned that smaller, unproven ventures are very vulnerable, even when they're earning a profit, a solid profit. And this is why I love dividend stocks so much, because they have barriers to entry. Not all of them, but the best ones, the types of dividend stocks I own, like Church and Dwight, these have very solid barriers to entry. They have diverse portfolios. They've been in business for a long, long time, and they have many clients. They're very diversified. They have really good quality control. And so what I've learned is this is why I love dividends so much. Let's keep going. Check it out on the screen right now. And so what else did I learn from this? I learned also that it's important to invest in yourself. Why, Ian? Why did you do it in 2017, investing in your friends? Just believe in yourself, invest in yourself. I would have been better off taking that money and putting it in my dividend stocks, starting my own business, putting it into one of my real estate deals. And that's what, honestly, what I've learned from a lot of this angel investing is, Ian, save your money, invest in your own real estate deals. Don't put it in these other people, and believe in yourself. And I think all of us in the community here, this goes back to the first point, the public service announcement. The meme is not going to save you. The false idols out there, they're not going to save you. The press, the hype, these 100% perceived profits overnight, it's not going to save you. What's going to save you is believing in yourself, doing your own due diligence, and making informed decisions. So that's something else I learned. Let's keep going. Check it out on the screen right now. And so I also learned that the tide can change quickly with risky investments. And so that's something I keep in mind, even for the speculative investments I still have. I've done well, actually, on them. But the tide, I know, can change, and I can lose it all very quickly. And that's, again, why I like dividend stocks so much. Now, with that, I want to go into investment number 2. This is a tough video for me. And this is why I think a lot of people don't share this stuff out there. Is it's tough to talk about your losses, but it's important that I do this because the community needs to know that even someone who's done really well like myself, I've weathered losses, I've gotten past it, and it's built character, it's built wisdom. So let's keep going. Check it out on the screen right now. What's my second mistake? My second big mistake. And by the way, these are net new mistakes that I haven't discussed before. I did a whole video I'll link to in the description below a long time ago about some of my biggest losses in the stock market. These are new ones. And so I'm sharing net new losses today that I've never shared before on the internet. So let's keep going with number 2. Actually, this is angel investment number 2. Again, it went bust. And so I invested a friend of mine. He basically lost control of the company. I can't even believe what happened at this company. I don't want to get into all the details because it almost sounds ridiculous. This one, but hey, I'll tell you, I put a bunch of money into this. And the reason I put a bunch of money into it is the guy actually is someone that I was an investor of before in a different enterprise. And that earlier enterprise, he did really well. And the company's done well. And I've been happy as an investor. And so I'm like, hey, I'm going to invest in him again. Well, basically with the new venture, he lost control of the company. The company dove into the ground. There's probably some salvageable value there still. But he says the reason he lost control of the company is because of spiritual matters. Basically, it was a good versus evil. And he is basically saying that these evil forces came in and on a spiritual level and overtook the man. And so maybe it's true. Hey, I don't know. But boy, it was just hearing this on the phone, like, Ian, you lost multiple tens of thousands of dollars because the evil forces came in and overtook my company and drove it into the ground. That's not what you want to hear as an angel investor, I'm just saying. But anyways, let's keep going. Check it out on the screen right now. What did I learn about this thing? This was one, actually, don't invest pre-earnings. This was pre-earnings. But the reason I invested is because the gentleman is a successful businessman who did well for me on another venture. And so I think this was kind of a turnaround play type style investment as well. So be careful with turnaround plays. But I think past success does not promise future success. And so one thing actually I want to share right now is I own a dividend stock, IBM. IBM is facing a turnaround play now. IBM has a lot of money, and in my belief, I think they're going to pull a rabbit out of the hat and have a really good turnaround. That being said, it's not so easy to turn around. And so even though IBM has all the money in the world, are they going to be able to turn things around, invent a new business, come up with some quantum computing or blockchain winner? Are they going to be able to do that? I don't know. And so that's something I need to remain humble because I've had some hubris about IBM in the past that, yeah, they're going to just pull a rabbit out of the hat and turn it around. But maybe they won't. And so turnaround plays can be risky. Anyways, that's that. That was angel investment number 2. Let's go into angel investment number 3. Check it out on the screen right now. This one, actually, I'm doing all right. So of the 3 that I made in 2017, I don't know when there will be a liquidity event for this company, but the company is doing just fine as of this time. And the fact of the matter is, will it be enough to compensate for my losses with investments 1 and 2? Probably not. I would say at this point, of all these angel investments put together, I'd be happy if I broke even or earned a slight profit when all is said and done. I would be over the moon, and I would take all the money out and put it into dividend stocks or real estate. But I would say some big lessons learned here as well from investment number 3 is that diversification is key with any form of investing. I think with angel investing, if I want to make it big, as with anything, I can't just piecemeal it together. I would have to become a full-time angel investor and just do hundreds of these. And I think also I have to realize I don't have the clout of someone like Ashton Kutcher, for example. And so I may not have access to the best angel investments as other people. And so I have to be cognizant of that. But I'm not prepared to do hundreds of angel investments. I'm not prepared to make it my full-time thing. Dividends are my full-time thing. And so for all future deals as of this time, I'm out of angel investing. And so I'm going to hold what I have. I have a few left over. And some doing better than others. I think the 3rd investment that I made in 2017 is the best of the bunch. And I have an investment from many years ago in the same gentleman, honestly, that lost control of angel investment number 2 from 2017 that may or may not, over the long run, have a liquidity event, do all right for me. But long story short, I learned a lot about angel investing, but that's where I'm at right now. I'm dividends all day, every day. That's where I got to be focused. And so with that, this is going to be a long video today, everyone, but I want to move on to number 2. So angel investing, quite frankly, that was just the first topic of 3 that I want to cover and how I've lost money out there. Thank you for hanging in there with me today. If you enjoy the longer videos, please don't forget to smash that like button. This is going to be a really long video today. So you may want to just break it up into multiple segments throughout your week to enjoy a little bit each day. But coming back from vacation, I'm fired up, and I'm fired up by what's going on out there right now. So I just want to share my experience with all of you because I believe sharing my personal journey, maybe it would resonate with a few of you out there, hopefully even more than a few. Now, how else have I lost money? Let's talk about that. Not a fun topic, but that's beside the point. This is important to get out there. Check it out on the screen right now. And so loss number 2 was, believe it or not, I own a timeshare. My wife and I own a timeshare in Hawaii. And did we buy it on the resale market for pennies on the dollar? No, we bought it from the actual timeshare company, and it cost a lot of money. Now, there are not only a lot of money that was spent, but there are recurring annual fees too, and these will go up over time. I would say pre-pandemic, it looked like we looked at it kind of as a lifestyle splurge. Post-pandemic, with travel restrictions, travel anxieties, etc., it's not looking like the best splurge. Now, I'll tell you with this one, let me give you some context. I'm the kind of person that likes a good routine, and once I get in my routine, it's hard to get me sometimes out of my comfort zone. So part of the reason for buying the timeshare, quite frankly, was to just say, hey, line in the sand, family, we're going on a vacation on X calendar schedule. We're doing that. This was an every other year timeshare, so we're every other year, we're going to Hawaii at least, hopefully more frequently, but at least every other year. And so in my mind, at least, I knew that if I paid the money, it's kind of like a gym membership. I'm forced to go and I get myself out of my comfort zone. I just do the travel. I invest the time in the family that I need to be investing. And so sometimes that's hard for me because I get so caught up in work. I get so caught up in my routine, in my YouTube. It's hard for me to break that cycle, and that's why the video today is a little bit late, because we went to Truckee, California, did some fun sledding over the last week for ski week and spent some time with the family, and that's important that I remember to do that, and I get out of my comfort zone and make that time for the family. Anyway, that was part of the reason behind buying it. But in retrospect, would it make sense to buy that from a financial standpoint? No, I could obviously take the same money, put it in dividend stocks, spin off cash flow, use some, it wouldn't be enough cash flow to pay for that. But certainly over the long run, as it compounds over 20 years, it might be. But obviously, it's not the best investment. And especially in a post-pandemic world, things have changed. As you can see on the screen right now, I learned some lessons from this. What I learned is the world changes fast. And so these days, when investing, I like to diversify, and I like to invest in assets that will thrive in great times of change. And I think something like a timeshare that's not in my backyard, that requires a long plane flight all the way to Hawaii, when Hawaii for a lot of time here over the last year has been shut down to visitors, that's a lesson. And so I would say also, on the positive side of lessons learned, sometimes it's okay to splurge. Honestly, I don't really regret this purchase to this day. I consider it a mistake, but sometimes in life what I'm saying is it's okay to make mistakes, and sometimes you don't even regret your mistakes. And that's kind of how I am with this one. Is from a financial objective standpoint, yeah, it's an expensive kind of mistake, if you will, but hey, we still own it and we're going to use it, and it forces me to spend time with the family. It's like buying a fancy sports car, if you will, that's going to depreciate a lot, which I also know all about. And I don't regret. But with the timeshare, that's something to keep in mind. For me, I wasn't kind of duped into it. I went there all out knowing, hey, I'm going there today and I'm going to buy it. I'm their easiest sale they've ever had. I wanted to. Yeah, you ask anyone in the financial community, hey, that's a mistake. And so I'm sharing it with you because I want to share with all of you the psychology, the thoughts, the process that goes through my mind. Is I am not a kind of just someone who always does everything 100% perfect, by the book, never does anything kind of unexpected. No, this is kind of unexpected. If anyone asked before this video, would Ian ever do that? They'd probably think, oh no, but I want to share a glimpse into my thought process because I am normal, I think, in a very similar way, probably to all of you or a lot of you out there today. And so with that, what's my third big loss that I want to share today? My third mistake. Check it out on the screen right now. And so I sold all of my restricted stock units from a past employer. And so I want to talk about that really quickly. When you work in the Silicon Valley at a tech company, typically you get stock in the company you work at. And when you work at a startup, you get options, if it's not already publicly traded companies, you get restricted stock units. But usually these companies, especially the smaller ones, salary might be a little lower, but they compensate you with stock. And the hope is over the long run that stock does really well. And I'm living proof that over the course of my career, it's panned out that way. I've done thankfully well on employee stock. But with one particular case, after I left the company, I was so burnt out. I didn't necessarily have the best thoughts going through my mind at the time. And so I was like, you know what? I want to sever all ties and I just want to sell all of the stock. And I would say that wasn't the right decision at the time because the stock has gone up a lot. And what's so particular and interesting about this one, people ask me, Ian, why do you never sell? The reason I never sell is because when I buy something, I do all the due diligence I can, and it's never perfect, but it's good enough, and I buy it, and I spend a lot of time figuring out what to buy. And I do the same with employment. When I'm trying to join a company, I try to really think, yeah, is this the right company? But once I'm in something, going forward, I never sell. And the reason I never sell is because the market can be unpredictable. There's a company like Caterpillar right now going through the roof. I own this one. Why? People are saying it's because of Cathie Wood. I'll talk about that a little bit later as well. Cathie Wood, incredible business person. I think too many people out there are worshiping her, and they got to be careful with that. And I think what you should be doing more of, rather than worshiping people like Cathie Wood, is honestly patting yourself on the back, believing in yourself, believing in the little person. I'm out there to say that I think I get more intelligence, more value out of the normal everyday YouTubers out there, the small YouTube channels, instead of looking up to someone like Kathy Wood, because it's the little people, the normal people who are grinding, who are putting in the hard work. Now, I don't want to speak down about Kathy. More power to her. I think she's doing great. I hope she continues to do well for herself and her investors. But I'm just saying, anyway, that side tangent, but I'll get into that a little bit later. But that's why Caterpillar is up so much. But the fact that Caterpillar is up so much is precisely why I don't sell. You just don't know what's going to happen. The stock market is crazy. And so I'm thinking now, same with kind of employee stock, like maybe sell some of it if I have to, but if I don't have to sell it, don't sell it. And so check it out on the screen right now. What I learned is never sell an investment, keep enough cash on hand, emergency funds to avoid having to sell. Don't let emotion affect investing. Now, emotion does affect me some ways because I'm emotional about this, and I think emotional attachment is good because it keeps me from never selling Church and Dwight. But emotion on the downside, negative emotions, is something I don't want to enter my investing. And so check it out on the screen right now. And so what I would say is the market's unpredictable, and when I'm working somewhere, what I would say is it's okay to sell some of the stock, I guess, because it's part of compensation, and compensation is needed to pay bills, pay for the mortgage, etc. But it's important, I think, to hold on to at least some of the stock, because the psychology of working somewhere and then leaving and not participating in the upside, it's kind of a bummer. And so that's something I learned through that mistake as well. And so now that I've gone through the public service announcement, I've gone through some mistakes I've made, so you can all see that, hey, I'm just like you. I learn and I make mistakes, and it is okay. I move on. I look forward. I look to the past, and sometimes it can be painful, but I try to learn from that and move forward. And in terms of moving forward, I want to give some tips, some hacks, some best practices on how I deal with the madness, because we are living a madness now unlike any stock market. And don't worry, at the end of the video, I'm going to go through some specific stocks I'm buying right now as well. So let's start with some tips. Check it out on the screen right now. And so the tips that I want to offer, I'm going to go quick. Be careful on Twitter. Twitter honestly has become toxic, and I'm trying honestly not even to log into Twitter anymore. Set realistic goals. Dollar cost average. There's no need to put it all in at one time in this kind of crazy stock market. I think it's important to pick a strategy and don't deviate no matter how tempting, although it's okay to carve out a very small portion for speculation. And I would say no more than 5%. No more. Hopefully less. My strategy obviously is dividends. I think number 5 is really important, is don't forget where you came from. So many people are forgetting where they came from. The reason I got into angel investing in 2017 is I forgot a little bit where I came from. I was trying to be the big man. Because honestly, with angel investing, it's kind of cool, because if you invest in an angel company and it does well, you can put it on your LinkedIn, and you can look really special online because you're an investor in that company, and people put it on their profiles. But when you invest in dividend stocks, am I going to go put on my LinkedIn, Ian's an investor, he's a real estate developer, he's a YouTuber, oh, and by the way, he's a shareholder in Caterpillar? No, you don't put that. People don't care. And so I was kind of thinking, I forgot where I came from, and where I come from is not very exciting, but it works, and it works so well. And so number 5 is really important. Let's keep going. Check it out on the screen. And so with number 6 is live real life and have hobbies outside of investing. That was so important for me to go on this vacation this last week, because I was able to live life a little bit. Focus on what you can control. I like to focus on how much money's been deployed, the forward dividend income, controllable metrics. And so I'll tell you, before I got here on YouTube, I wasn't even comparing myself versus the S&P. I wasn't looking at capital gains. I just didn't really care at all. I do it now because the community cares, people care. A lot of investors on this channel here, they're not just about dividends, they're about total returns. So I share it. But honestly, that to me, it just doesn't matter. I only look at controllable metrics. And the two that are important is, am I getting money into the market? And then 2, what's my dividend income doing? How is it doing over time? Let's keep going. Check it out on the screen. I've already talked about this, but be careful of these false idols. You don't have to follow their every word. I've actually found, like, look, I respect Elon Musk, Kathy Wood. There's this new guy who kind of popped out of nowhere, and everyone is just retweeting him and quoting him. His name is, I hope I don't mess up his name, but Chamath Palihapitiya. Hey, he's a very successful technology guy. Good for him. But boy, people seem to be just hanging on his every word. I'm saying, look at what all the people say, take in the knowledge, but believe in yourself. You're smarter than you think. You have more power than you think. Your ideas are probably better than you think. And look at all the YouTubers out there and the sources of information who are more normal people. Honestly, I found a lot of the best wisdom comes from that type of community versus looking way up to these false idols. Like, one of the things I felt that I didn't like as much that Elon Musk was doing was just tweeting about Dogecoin, for example, and all these people are getting into Dogecoin, and that's a very risky investment in my humble opinion. And so just, you got to be careful of those types of things out there. But obviously Elon has a very awesome company. I don't know, quite frankly, if I would want to buy a Tesla car, maybe one day. But one of the products that Tesla sells that I'm very interested in learning more about is that Tesla Powerwall. I think that could be a really cool product. And so there's a lot of goodness he does as well. And so, but you have to be careful hanging on to every word of these figureheads out there, because they're just figureheads. They're just honestly normal people like you and me. So let's keep going. Check it out on the screen right now. What are some more tips? When in doubt, stick to your ride or die list. I have my own ride or die list. Many of you know what it is. It's you want to learn more, just check out my past videos. But if I'm ever confused in the market, I'll go back to basics these days. If I start thinking, Ian, should you be making an angel investment? I'll just go back to my ride or die list. When in doubt, invest more money in fewer positions. I think this can help with focus. I think focus is always a good thing. If you have fewer positions, you're less tempted to just buy junk. Number 11 is important. Realize you have nothing to prove to anyone. Just live your own life. This is something that I think you learn more and more as you get older. When I was in my 20s, when I was younger, you have a lot to prove. You have a lot to live up to. There's expectations. You get older, you just want to live life, have your best life. And so, coming from an older dude, everyone, listen up that if you're younger, you're trying to prove something to someone, you have nothing to prove, I'm telling you, and certainly not by making risky investments. Let's keep going. Check it out on the screen right now. What I also want to share is it's important to have an accountability partner. After I lost money on angel investing, my wife basically said, Ian, I'm never going to allow you to invest in these angel stocks again. And I'm glad she said that, because I now do have an accountability partner where I'm not going to slip up. I'm not going to go and gamble money away on some angel investment. I'm going to invest it in myself, which is the same as investing in my real estate deals or in my YouTube channel or in the types of dividend stocks that I buy, like Church and Dwight. And so with all of that, I know it's a long video. Thank you if you've made it this far. I love you all. I want to give you extra value in the video today because you've been waiting for this video. I want to go into right now a few hacks. And so check it out on the screen right now. Hack number 1, be thankful for the portfolio you have. And so, have you ever been on vacation just to come home and appreciate your house even more? One of the hacks I do before I go on vacation, for example, I try to clean up the house a lot. And so this last week or 2 weeks ago before our vacation, I spent a lot of time vacuuming. I spent a lot of time tidying up. We spent a lot of time decluttering and finding items for charity. We did all kinds of stuff and did a deep clean on the bathrooms, all that kind of stuff. I'll give you another insight. Some of you may remember a while ago, I hired a housekeeper. Housekeeper is gone. Housekeeper damaged our house, and so I'm back to doing it. My wife's back to doing it. What I've learned is if you want something done right, do it yourself. And the same goes with the stock market. Is this false idol up there telling you to buy XYZ? Got your best interests? No, you have your best interests. And so who's going to do it right? You are. I am. And so we all need to have confidence in ourselves and invest in ourselves. And that's another way of looking at it. But anyways, we're our own housekeepers again. And when we came back from the vacation, I was amazed. I was more appreciative of our home than I was before I left, because when you're in a hotel room, things are a little smaller. You have a family of 4. We have 2 kids, and we had a nice room with a bathroom and then kind of a living room, kitchen area, and a separate bedroom. So it was more than enough for the 4 of us, but it was smaller than we're used to. And so when I got home and I saw our beautiful, tidy home, I had a newfound appreciation for it. The same goes with dividend investing. And so if you're feeling like, hey, my dividend portfolio, it's no good, it's not big enough, I don't have enough money, everyone else is making all this money. Well, they're not. Remember, they're only reporting their wins. No one's out there talking about their losses, except for me today, going through all my big, multiple tens of thousands of dollar losses. But no one's doing that. And so the trick is to appreciate your portfolio. Just take a step back, take a week off, don't look at it at all, do other stuff, come back to it. It's kind of like the house with the vacation. I think you're going to have more appreciation for what you come back to. So check it out on the screen right now. I want to go over another hack, and that is if you're on the fence. Are you on the fence about buying a certain stock? Usually I am when it's a speculative stock. When it's a non-speculative stock, I am never on the fence. I'm like, hey, General Mills, yeah, I'm all in. And so anyway, what do you do in life when you have a major decision and you don't know what to do? Typically, you just give yourself some time and sleep on it. And so this is the same thing with investing. If you don't have 100% conviction, I will delay it. I will take as much time as needed. I will realize there are an abundance of amazing opportunities. And so some people think, oh, I'm going to miss the opportunity. It's going to go. You're going to miss anything. There are so many opportunities out there. You don't have to swing at every pitch. Even if it's a perfect pitch, there's going to be thousands of more perfect pitches. There's an abundance of money out there. There is never any rush with money, with investing, or with life. Take all the time you need. That's what I have learned as well. And so that is hack number 2. And it's helped me avoid a lot of mistakes over the years. And it's something I harness to this day, because I do get tempted from time to time to buy XYZ hot stock. And so let's keep going. What's another hack? Check it out on the screen right now. I would say the other hack is just be very, very careful about comparison. And so there's this kind of comes in a variety of ways, but like I said before I started my YouTube channel, I wasn't benchmarking against the S&P. I didn't compare myself to the S&P. I was just looking at dividend cash flow. Now I do benchmark versus the S&P because people here care about it, but if I were left on my own and I didn't have a YouTube channel, I wouldn't even look at the S&P. I would not care. And so I think the comparison honestly is dangerous. It makes you feel like you're doing the wrong thing with dividends, but who cares what the S&P is doing when all I'm trying to do is drive cash flow to pay bills and to face an abundance of cash flow in my early retirement, or at least my partial early retirement. I would realize that we all have unique goals. I've talked about this before, so I don't want to talk about it too much today, but we are all on different paths, and so we don't all have to be the same. We don't all have to be making the same amounts of money. People with less money can be happier than people with more money. Boy, I know I've seen this a lot, especially in this area. People with all the money in the world aren't happy. And so we have to realize that comparing ourselves to other people is absolutely pointless, and especially comparing on money, because honestly, money does not make the happiness. I would say time can make happiness, financial freedom, accomplishment, living a good life, but certainly family, not bank account balance. And so I would say also, I don't want to take credit for this either, because I saw this is something positive I saw on Twitter recently. Forget who put this. It was one of the newer YouTubers in our community, and I apologize for not remembering. But someone was basically saying that the money deployed matters more than percentage returns. And so think about it. If you invest $5,000 and you're up 100%, you now have $10,000. You made $5,000. You doubled your money. But think about it. If you invest $100,000, you can make the same $10,000. You can have an appreciation up to $110,000 by only earning 10%. And so what the key takeaway is, why am I so focused every day, brick by brick by brick, deploying more money? The reason I am is I realize, I guess I didn't really look at it the way that this person was saying on Twitter, but I was kind of instinctively thinking about this. Who cares about the percentage returns so much? Let me just get my money working, because I know the bigger and bigger and bigger my portfolio is, I need smaller and smaller and smaller percentage returns to have the same net effect. And so I think that is so important and so comforting that XYZ person bragging on Twitter with the diamond hands might only have $100 invested, but you may have $5,000 invested. And so it's just very different, and risk tolerances are different, and percentage returns required are very different. And so with that, I want to go really quickly, because most of you know this, but I want to share my game plan on the screen right now. So check it out. And what you see on the screen right now is just what's my formula for success. These days, world-class dividend stocks. I am always deploying capital each and every week. Good markets, bad markets. I try to deploy more capital in down markets, but even in good markets like we're in now, I'll deploy capital. I'm always focused on the long term. And when I say long term, no, I'm not looking at 1 year, 2 years, 3 years, or even 5 years. I'm talking about 20 years or more. I never deviate from my strategy going forward, because boy, have I learned my lesson. And I've shared some of my failures today. But I have shared other failures in the past that I'll link to in the description below. And so I have learned it. I've tried it all. I like to have guidelines for the year, but it's okay to default back more conservatively. This is important. When I came into this year, I mentioned how I was really going to go heavy on companies like this, Church and Dwight. And I am. But I had a goal, like, I don't even remember. I shared it in one of my videos. Check all my past videos. They are awesome. I spent a lot of time on each and every video. But basically what I was going to do is put the lion's share of my money in these higher growth stocks, like this one. I have found myself, though, honestly, falling back into my safety net a little bit, that I am putting money also into my core stocks, even into some of my bond-like stocks. I'll talk about that in a minute. And so it's okay. And so what I'm saying is each year I have goals. And so this year, it's not speculation, I would say, but it's a high growth year. That being said, am I going as aggressive in high growth as I originally planned? Not quite. I find myself falling back on old habits, and old habits are more conservative stocks, but that is okay. What I found as an investor, for my personal journey at least, is it's always okay to default back on good conservative habits. All right, everyone. So with that, I think this is the part that a lot of you have been waiting for, and maybe some of you even skipped here. If you did, I do hope that you go back and watch the rest of the video, because a lot of layered insights today. And I know it's a long one, but what am I buying right now? So check it out on the screen right now. I'm using the same template that I use for my watch list, which I am updating and sharing regularly on my Patreon. If you want to learn more about my Patreon, check out the pinned comment below. Already have about 120 patrons over there. Thank you so much for your support. The one that I bought today that I highlight in yellow is Church and Dwight. I bought more Church and Dwight today at $80.46. This one ties into the theme of high growth. And this year I am focused on high growth. And you can see that with the PE ratio forward for 2021 of 26. This is an expensive stock, and the dividend yield is only 1.3%. But this is a company that is growing quickly, is growing its dividend quickly. And I am very sure that in 20 years' time, I'm going to be very happy with my dividend yield on cost. Now, I will also say recently, just in terms of a fun fact, one of my favorite rappers, Rick Ross, he did a sponsored ad on Instagram for the Trojan brand that Church and Dwight owns. And so I thought that was nice to see that Church and Dwight is with the times when it comes to marketing. And I thought that that was a clever strategy for marketing their product. Now, what I just talked about was falling back on old habits. And one of the reasons I'm falling back on old habits now, quite frankly, is I just see plain value in some of my ancillary stocks and core stocks as well. And so Campbell's Soup, I have not bought this week just yet, but I do plan to buy it this week. And it's trading at $45.81. And it has a forward PE of 15 this year, of 14.97 next year, with a solid 3.2% yield and a really good payout ratio, only 48%. And so this is a smaller company at a market cap of 14 billion. It is a snack food company that is finally on the right trajectory. I am basically buying it now. Yeah, it's not a high growth company, but I'm falling back onto old comforting habits because probably of all the hype out there right now, as I just said, but also because it's a value. And I'm doing the same with General Mills. I'm going to be buying more this week, most likely. Much like Campbell's Soup, it is trading at a PE of high 14s, low 15s, not growing like Campbell's Soup is quite as quickly. The analysts don't expect that, at least, but I'll take it at this valuation with a 3.6% dividend yield. And the payout ratio is low as well at 54%. Very similar story to Campbell's. And so these are ancillary stocks that are bread and butter stocks in my portfolio that I'm buying right now. Another one I expect to buy this week is Kimberly-Clark. It is a core ride or die stock. It's not a quick grower, but it is trading at a PE right now forward of 16 and 15.9 next year in 2022. Solid starting yield of 3.5%, payout ratio less than 60%. And so I see some great value, and I see some EPS growth, at least looking at 2021 versus 2022. So the analysts do expect Kimberly-Clark to keep growing over time. And so those are four. Well, one, I already bought Church & Dwight. Campbell's, General Mills, Kimberly-Clark. I'll probably buy all or a mixture of these this week. And I'll tell you another one that's on my mind right now is Universal Corporation. And so Universal Corporation is a bond-like company. And I'll tell you, one of the reasons I'm looking at Universal Corporation right now is twofold. I recently saw kind of some news articles insinuating that Mr. Bill Gates is out there buying up all the farmland, all the agriculture. And so that story didn't resonate with me. I'll leave it there. The next thing that I realized is when I was driving to the Truckee, California area from here, the Silicon Valley area, and I was seeing all the wilderness out there, it was interesting to realize that there's all this land out there. And I started thinking about companies like Plum Creek Timber, which I've been following forever. That's one that was acquired by this company. I think it's called Weyerhaeuser. It's a big lumber company, real estate investment trust. I might actually go ahead and review that at some point on my channel. But I even saw a truck go by with the lumber saying Weyerhaeuser. I think that's their name. I think the ticker is WY, something like that. But anyways, I started thinking, Ian, you need to own some more farmland. It just got me thinking out of the box. And I think about the future, global populations increasing. We have very precious few resources on this planet. I want to be a good steward of those resources. I want to hold them for the long term. I want to have some farmland in my portfolio. And so I was also looking at something, ticker symbol LAND, Gladstone Land REIT as well. And but then I started thinking, wait, Ian, you don't need to diversify. I'm not saying it's diversification. I think these are probably good companies. But I'm just saying you don't need to diversify. You already have 50 stocks. You don't need more. And so I started thinking, hey, you have a farming company, Universal Corporation. And so anyways, all that got me thinking, why don't you put some more money in Universal? And so check it out on the screen right now. Sometime soon, I don't know, next few weeks, I'll buy some Universal most likely. It's trading at $50. And based on the trailing 12 months EPS, it has a PE of 20. But if you look on the analysis here, I actually pulled their earnings reports and I look at their adjusted numbers. On an adjusted basis, trailing 12 months, their PE is actually a 13. So we're in value territory for that company. And they farm the product used for sin stocks. That is risky, but I imagine, and I'd love to hear here from farmers out there. It's risky in the sense that that's a declining market over the long haul, but I'd like to hear if there's any farmers here watching my channel. I don't know if these lands are repurposable for other types of crops. I'd love to learn that, but I know Universal does have a multi-tiered strategy, and they are thinking about adjacent verticals and how they can use their farmland for more than just the leaf that is used for sin stocks. So any farmers, I'd love you guys to chime in here what you think about that and if they can pivot or it's really hard to pivot. But company has been in business, I believe, for over 100 years. They're really got a solid 6.1% dividend yield, and the payout ratio is over 100%, but on adjusted, it's not. On adjusted EPS, the payout ratio, let me run the calc really quick, comes in at 80%. And so $1.2 billion market cap. This falls into my wheelhouse right now of trying to focus on some of these smaller companies as well. I'm just trying to go after a few of the smaller companies in my portfolio. And so going into this year, I never thought I'd buy one of this bond-like companies this year because I'm more focused on growth. But you see me falling back onto old habits. And I think one of the reasons is when the media does one thing, social media does one thing, I kind of go the other way because I need to fall back onto good habits so I don't make mistakes. And that's where I'm at as an investor. But anyway, I'm going to be buying some more Universal. And so share in the comments below which dividend stocks you're buying right now, which are the ones that are on your watch list. All right, everyone, that's the video for today. Please do not forget to smash that like button if you enjoyed the video today. Boy, did I put a lot of work into this, and please subscribe as well. I have so much more content on the way. You do not want to miss out. I love you all. Head on over to my Patreon for more valuable content. And before I leave today, in terms of a full disclosure, I own the stocks mentioned today, or a lot of them. I am a long on Church & Dwight, ticker symbol CHD. I am also long on Campbell Soup, ticker symbol CPB. I own General Mills, ticker symbol GIS. I am long on Kimberly-Clark, ticker symbol KMB, and also on Universal Corporation, ticker symbol UVV. I am also long Bitcoin, ticker symbol BTC. I am long on IBM, ticker symbol IBM, and I am long Caterpillar, ticker symbol CAT. I own those ones in my personal dividend stock portfolio. Before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. Just sharing my journey here on YouTube for fun and entertainment. It is so possible to lose a lot of money out there in the stock market. It's a very risky stock market, so please be mindful of that and consult your licensed investment advisor first. My journey here on YouTube is just my journey sharing for fun and entertainment. I love you all. I will see you in the next dividend investing video.